Welcome, everyone. Thank you for joining us for this discussion with Ulrich Bindseil on the next phase of the Digital Euro project. Ulrich is the Director General of the Market Infrastructure and Payments Unit at the European Central Bank. And thank you all for joining us. I'm John Orchard, OMFIF's Chief Executive. The Digital Euro project has just moved out of the investigation phase and is now moving to the preparation phase. And Ulrich is going to talk to us about that in a moment, as he kindly did when the investigation phase was launched. It looks to us like the conclusions of that work are potentially pretty bold. The digital euro could maybe be a material change to the payments landscape in Europe, with broader implications perhaps not just for retail payments, but for Europe's digital economy, and indeed maybe the status of the euro as a whole. For example, in work elsewhere, and this isn't the subject of today's discussion, OMFIF measures reserve currency allocation intentions, where the euro has been broadly steady since its inception, but for a variety of reasons is now attracting renewed interest from reserve managers outside the eurozone. It's possible or even likely that the digital status of the major currencies is going to be important for their relative status and their sovereignty. The sessions on CBDC at the Marrakesh IMF meetings just now were packed, as many of you will have seen. It remains complicated. Physical cash has all sorts of attributes which we're rediscovering as we think about how to digitize it. And the financial and payment system caters for a range of technical and regulatory requirements which are difficult to reinvent or replace from scratch, as the many working groups are discovering, and indeed to make interoperable. We think from OMFIF's daily discussions with central banks that there's still a fairly wide sliding scale on the intended level of public sector involvement in the front end of digital money and payments, as physical cash becomes gradually obsolescent. And there are differing views about the role of public money to support transaction and settlement in digital financial markets. We're with HKMA and BIS next week, for example, in Hong Kong, running a roundtable on exactly that, along with the many very difficult cross-border payment conundrums. That's not our focus today, though, which is rather the format of money and payment infrastructure for European citizens in the medium term. Katie Ann Wilson, my colleague who runs our Digital Monetary Institute, will help explore that in a moment. But firstly, Ulrich, thank you again very much for joining us, and over to you for your presentation. Looking forward to chatting with you shortly.
Yeah, thank you very much, John, for having me again, and it's a pleasure to be back. And I will share my presentation. It's disabled. The screen sharing is disabled for me. I just noted. Sorry, we didn't check that before. So either someone enables me or someone, a colleague from OMFIF, would show the slides. I mean, in the meantime, I can start speaking. Anyway, so
if you launch the presentation, Max, yeah, that would be great.
Yeah. So we had, I mean, CBDC, digital euro is not new, so I will not start from scratch. We had various discussions, or the discussions on the fundamental justifications on one side seem to have taken place. On the other side, there is still a lot of questioning. So I always get questions, why do you do this at the end? So I will say it just in 3 sentences again. In a digital age, CBDC is a way to preserve the role of central bank money, the coexistence of central bank money and private money that we had for a long time now, and that had served societies well. Why do you need this coexistence? There's first a fundamental reasons to that. And this fundamental reason is that private money is defined as a convertibility promise into public money. Public money holds everything together because everything is a promise of conversion into central bank money. And it's a very abstract world where central bank money would have disappeared, but still, one currency unit, €1, would be equal to €1 because of a convertibility promise, which is not, material, because there would be no central bank money. That's a fundamental reason why central bank money should be preserved. And the second reason is also that relates to the nature of central bank money. Payment is a network good a network function. So the more successful you are, the more competitive you are. At the end, typically one or few providers crowd out the rest, and therefore, you have market power and possible abuse of market power, and that's why a public offering is important. A public offering that is designed with the view of citizens' need, which is designed not to maximize profits, even if it has a dominating position, to serve the citizens, because it is not, designed and priced for the benefit of shareholders in this market with positive network externalities. But that is just a repetition. It was said many times. I'm still disabled, by the way, for the presentation. So, what happened? As you know, we had launched a project in investigation phase in July 2021, which started on 1st of October of that same year, which was announced to take 2 years and which took 2 years. So now we are in the next, we just enter the next phase. We are now in a sort of interim moment because our governing council announced to enter, as John has been saying, the next phase, which is a preparation phase. And the achievements of the investigation phase have been, I would say, well documented. Here's the presentation. Thank you. So we can move maybe to the next slide directly. Is that possible? Yeah, here you go. That's what you can see here is indeed, what we have published at that occasion of the governing council's decision, a press release, but also a summary report of the investigation phase called a stock take on the digital euro. I think it's a 30 or 40 pages document, which puts together all the findings, all the conclusions from this first phase. And I will say a few words, obviously, on what the next phase is about and what we have achieved in this first phase. So next slide, please. Or you can directly move one further. So the design of the digital euro. And in this presentation, I have to apologize. I have a lot of visuals. I was always, questioning the need for such visuals. But okay, now I've embraced the principle that everything needs to be accompanied by visuals. So I will have a visual almost on every slide. But so digital euro summarize, some design elements that come out of the investigation phase. So it's really about responding to evolving payment habits, payment trends. Clear trend. Also, our latest empirical research showed the trend towards electronic payments is unchanged. If you extrapolate it, we will enter a digital payment age. And we want to make people's life easier. I mean, in a concrete sense. In an abstract sense, we want to preserve this coexistence of central bank money and private money to serve people. We want also to preserve Europe's resilience. The geopolitical trends are unfortunately as bad as maybe they could be. They could always be worse, but they are bad, I would say. So resilience is important, and a certain degree of autonomy also in this growingly important digital payment space. Next slide, please. So we have ordered, let's say, the features, the specification of the digital euro design into 3 elements here: access, payment features, and business model. And I think those 3 colors will be preserved on the following slide. So next slide, please. Yeah, in the space of access. So clearly, it should be, I mean, that was a conclusion, early conclusion, should be available in several payment scenarios. Actually, in a comprehensive sense, it should cover really all the main use cases. So not only use cases which are not well covered by the industry, but exactly the use cases that are also covered by the private industry, because those are the large scale use cases. And a mean of payment, again, is a network good, also from the perspective of the user being able to use it in all payment situations. So we include person-to-person, POS payment, and even payment to and from the government, and online, sorry, of course, so POI payments. It should be widely accessible, and that's in line with the digital euro legislation. So all euro area payment service providers should offer it. Yeah, so every bank should offer it. Every non-bank PSP, let's say in this business, should offer it. And also all euro area merchants should accept it through an effective legal tender provision. Of course, this, universal distribution and acceptance is a great plus for the digital euro, because of this network, those network effects, which are so important in payments. And yeah, of course, person-to-person payments as well. And it should be inclusive. It should not leave anyone behind. So if we take it really from a public, good perspective, in a world where, digitalization and maybe the use or the decreasing, unfortunately decreasing acceptance of cash makes life difficult for some who are less, easily onboarded to some private solutions. We should try hard, with digital euro, to not leave them behind, to, accept the extra costs also that this implies. Next slide. Yeah, now moving to payment features. So yeah, there would be a number of, features that consumers, of course, expect, and some of them are, I would say, standard. So, starting from what everybody has got used to in terms of convenience, plus, let's say, some distinctive extra features to also have some distinguishability, and to see, what are gaps which could be filled. In particular, if we anticipate that digital euro is something for a world where cash may be used less and less. So again, like cash, in principle at least, should be accepted everywhere in the euro area. So cash in terms of regional acceptance, I think that's not questioned in any, corner, be it in Frankfurt or be it on a Greek island. Cash is accepted. Central bank money in the form of cash is in principle accepted. Online and offline functionality. Okay, there may be a surprising component is the offline, or the one that is not covered yet. And again, the offline, I think, aims at this future scenario where cash is used less and less, not because we as central bank want to phase it out, but because people use it less. And here offline would fill a gap, in terms of then coverage and also resilience towards temporary, loss of connectivity or electricity. Then privacy by default. So here we try to push the frontier of privacy a bit further, to beyond what is offered by private solutions. And this privacy includes that as Eurosystem, we don't have access to identities. the identities are pseudonymized at our level. And moreover, then in the process, in the payment process, we hope or we work on maximizing privacy. Of course, privacy may have its limits in the wish of the legislator to maintain, a similar or partially similar treatment in AML terms as other private electronic means of payment. And of course, also the safety and resilience of the processes must be guaranteed. But leaving that aside, we want to maximize privacy. We foresee the possibility for conditional payments, not programmable money. So money should never be, become conditional. 1 unit of euro is 1 unit of euro. It's not there's not specific units of euro having different properties, so no programmable money. But of course, conditional payments in the spirit of open banking, the possibility to have API-based payments, triggered payments by conditions by external machines, etc. So that should be foreseen for the sake of innovation and reaching at least the same standards as we have for private money, electronic money. And one important point is easy portability of digital euro holdings from one wallet to another, including in emergency situations when maybe one provider is not available. Then the next set of features is really more the ones that we are used to, that we expect. So a smooth onboarding experience, ideally using existing online banking apps or the new digital euro app, the standalone app, payments via mobile phones, physical cards, contactless payment via QR codes, alias payments, and the holding limits and or the mitigation of implications of holding limits via linking your digital euro wallet to a commercial bank money account, including what we call the waterfall and reverse waterfall. So an automatic sweep in one or the other direction between those accounts, even instantaneously. So the next field is the business model, of course, also a tricky one. So the intermediaries, banks and others will, be compensated for their services. That's the idea. So presumption is there's a merchant fee, which is then used for compensating the issuer, so to say. The issue, we are the issuer of the digital euro, but the providers of the wallets and the service providers around digital euro holdings for customers, they should be compensated for their costs. So it's maybe a relatively standard business model. And the euro system on the other side, will take care of the settlement layer. So this is central bank money, and this is not synthetic CBDC, but really the euro system settles every transaction directly in a single layer architecture. And the idea, to have the industry distribute and collect digital euro in an open, innovative, competitive way, of course, needs to be reconciled with policy objectives. And therefore, the solution for that is to have a digital euro scheme. So everybody involved will have to comply with the digital euro scheme, which will on one side, achieve this openness, but ensure that we achieve the policy objectives, like, for example, of course, pan-European use and interoperability. The next slide, please. Yeah, here some more on the compensation on the business model. So it should be free of charge, the use for core services for citizens. We assume that it is attractive for acquirers and merchants through network effects and an efficient setup, which achieves low fees at the end. And again, the scheme, the rule book of the scheme has to, create this environment of efficiency and network effects that allow for low costs at the end. Economic incentives for distributing payment service providers. Eurosystem bears its own cost as for the production and issuance of banknotes of the digital euro settlement layer. Next slide. So now on this preparation phase, yeah. So we call this phase now actually preparation phase 1. So that this suggests that the subsequent phase, which is not named on this slide, could be called preparation phase part 2. And what do we do in part 1? We continue working. We will continue and finalize the digital euro scheme rulebook, and we will select possible providers and technology for digital euro. I mean, so far one could say the investigation phase was focusing on, use cases and functionality, taking a technology agnostic perspective to the extent possible. So this technology agnostic perspective will, be gradually now moving into a more, technology specific perspective to find out what are the technologies which will allow for this functionality. So that will be an important part of this phase. And also we are, accompanying and awaiting the outcome of the legislative process. You have seen the Commission's legislative proposal. Currently also the ECB is preparing its opinion on it. It's like every such proposal, opinions are thought, and we are preparing ours. But generally, I think we can live well with the vision of the Commission on this digital euro legislation. But that process will take time. Obviously, government and parliament's views will be relevant, and we, of course, respect those views and await the final version of this legislation before being able to also, finalize our work. So that, creates a process where we can continue working on many things. On some fields, we can take assumptions, but of course, if there are surprises, if the legislator at the end, changes the text in a way we did not at all anticipate, we may have to do extra work, of course, and to adjust, what we have already done. Next slide, yeah. So or maybe let me say one more word. So this phase is 2 years, and this phase is not, still not a decision to issue digital euro. There has been no decision, I want to say. That was explicit in the press release and the communication. There can only be a decision also once the legislation has been enacted, has been finalized, and then a decision can be taken. And in a certain way, a decision, is needed at some stage when the legislation has passed, because everybody has to really make further investments, not only us, but also the industry, and the industry can be requested to make large investments only if, there's some expectations that digital euro would be issued. But all this is for the future. Yeah, So I think here I have said what is on this slide, and indeed, yeah. So here's again, the collaboration needs to continue with all those stakeholders. I mean, we collaborated with all of them, and here's again a list of all the things we have been doing with those stakeholders. Quantification. So I mean, in particular, Fabio Panetta, the president, were in 10 Eurogroup meetings, 6 econ hearings. That was Fabio Panetta in the European Parliament, 20 coordination meetings with the European Commission over the 2 years. Then we have the ERPB meetings, so 13 meetings in total where digital euro was a topic. I mean, including special meetings on digital euro, 12 market advisory group meetings, and lots of bilateral exchanges with, banks, banking associations, other parties, non-bank service providers who approach us and who want to, give their views. So we listen, of course. Civil society is obviously important, and one form of the interaction are civil society seminars devoted to digital euro, and we had lots of general public events of all kinds also. Next slide. Conclusion. Yeah, I mean, here once more the basic, let's say, reasons and messages. Central banks should also be fit for the digital age. They should not, for whatever reasons, be the only ones sticking to paper technology in a world where, everybody has moved now for quite a while into digital technology. Obviously, it should be truly pan-European, not only in the geographical sense, but also across use cases. And as a motto, reliable money, no matter what. Money is not just one function in society, but money is the basis of division of labor and of modern society. It's the precondition for everything. So it is important that a public sector offering remains and holds together the monetary system, which is defined, the private money is defined by the convertibility promise. And let me stop here and give the floor back to John or to Kathy.
Thanks so much, Ulrich, for the useful overview. We'll forgive you though for the stock images that I don't think you like very much from the team. I have a lot of questions and we're going to come to some digital euro experts in a bit, but my first takeaway from this, Ulrich, is what will be the impact on business models, current business models of payment service providers. I think you've clearly said that the euro system will bear the cost. You won't charge providers, but they'll still have a lot of costs on integrating the digital euro. So how do you see this impacting PSP business models and the payments landscape more widely?
Yeah, no, thank you. That's a very good question. And I would say, I mean, I mentioned in my presentation, there will be a sort of, call it business model. We call it compensation model, which is not totally, different from what the industry is used to. And of course, digital euro introduces, something new, and therefore it is a moment for everyone to be attentive, to jump on the train, and to, I would say, proactively embrace the opportunities coming with it. And, with every change, those who are, waiting and for too long, they don't necessarily improve then their role in markets overall. And of course, we assume that digital euro will be a success now. Otherwise, we wouldn't do it, or we would do it differently so that it becomes a success. So under the assumption that it is a success and is widely used, then probably the complementarities for payment services providers to their existing products are important. there are positive synergies, and again, that implies the importance of PSPs to proactively, seek the opportunities of a digital euro. And just to say, the payment market is a very dynamic market in general and is fluid, and there are new market entrants, and the landscape can change. Just to say, digital euro is not the only factor, which moves this market. It's a moving market anyway, where everyone has to evolve and be proactive to keep a market share.
Yeah, but just on the digital euro app, then, is there not a slight concern that this would compete too much with banks and payment service providers? Because it sounds like, even though you're minting a digital euro, you're also delivering a payment service.
Yeah, I mean, the separate digital euro app is, first of all, there could be some people who don't want to go via their bank, who want to use a digital euro autonomously. I think it makes a lot of sense to go via your bank, because you can connect to your bank account, and if you have anywhere your banking app, and with a few clicks you can onboard a digital euro, why not doing it? But we still want to give the possibility, for people who want to keep it separate, to have it separate. There could also be unbanked people, let's see the exact perimeter of eligible residents, who can have it, also in terms of age, but maybe there's some group which has no bank account, and moreover, we want to make sure that there is a possibility. So if some banks, for example, are lagging behind, are not, despite the theoretical obligation to distribute digital euro, are not doing it too well, then we want that the citizen is not suffering from it, but then can fall back on this digital euro wallet, the app, the independent app. But again, here, we don't want to crowd out anyone. We want to rely, and even in my at least thinking, the separate app doesn't mean that we become the service provider who interacts with clients, but there needs to be, my vision at least, someone, a service provider who is tendered to then play this role that otherwise the bank hosting the wallet would play. No, I think it doesn't mean that we want to go beyond. We may have a dedicated service provider to service and the clients who go for this separate app.
Right, and if when paying merchants through the app, will they still have comparable opportunities to earn like transaction fee revenue as they do in the current system, or would that be different?
Sorry, if one uses a separate app and in the extreme case has no relation to a bank account, then I mean this dedicated provider that we selected for the separate app, then we'll earn some fees from the scheme.
No, perfect. Makes a lot of sense. And just want to come back to this argument as well on maintaining or preserving Europe's strategic autonomy towards non-European private providers. And when I heard this, I thought back to the European Payments Initiative, the ECB-backed payment integration scheme, which I think is like a pan-European card scheme. So I wanted to ask, with the digital euro and this pan-European card scheme, should we see the CBDC as another tool like this pan-European card scheme to sort of take back control of payments? Is it another tool, or are they working together?
I mean, we continue to support EPI. EPI was ticking the boxes of our retail payment strategy, and at some stage, the ECB had a press release really saying EPI, is the one that ticks the boxes, and we encourage this to move ahead. And it's somewhat changed over time. So it's no longer a card scheme, you could say. It is really instant, an instant payment-based instrument. So, you know, if you want like Bizum in Spain, which you are, you know, but maybe more comprehensive, which you could use at the POI and for P2P payments. And we would say, you know, there's ample space in this market for European solutions. So we continue to support EPI. And if you know, coming back to your previous question on service providers for digital euro, I mean, there have been no talks, you know, with specific groups now of candidates, but EPI will be a PSB, you know, with a big reach. So you know, it's clearly one candidate, like other PSBs for distribution, and you know, it ticks the box of European governance, which is a positive one from our perspective because of the sovereignty. But again, you mentioned sovereignty, and you know, there's a lot of space for more sovereignty, you know, a stabilization and renewed increase of market share of European solutions after years of trend of really losing market share.
Yeah, no, certainly, and I think Europe isn't the only country reacting like this. I think India, we've seen their own RuPay, Brazil, so it seems to be a global trend that we've seen. Before I turn to our panel of experts, I have one more key question that I'd like to address to you on the design features and specifically the holdings. So I think you've always been very clear that there'll be a limited amount of holdings for end users, for individuals, but I wondered how you were looking at business users, merchants, governments or public authorities, and how that will work.
Yeah, I mean, the current thinking is that the money flows, you know, instantaneously. I mean, for all those holders you mentioned, different from citizens, from residents, the money flows directly to a commercial bank account. So there are no limits. You know, we don't have the pain of starting to define which business, which firm could have which limit. The design is such that the money, once leaving the resident's wallet, flows back, you know, either to another citizen resident or flows then back directly to a commercial bank account.
And this is the waterfall.
No, the waterfall we use this term for the wallets of individuals, of citizens, where, you know, if you, let's say you would have a 3,000 limit, and you hold 2,000 and you receive a 2,000 incoming payment, then if you activated this function and linked it to a commercial bank account, 1,000 go directly to the commercial bank account, and vice versa. If you have 2,000 and you buy something for 5,000, then the missing 3,000, if you activated that function, would be taken directly from a linked commercial bank account.
So it's always possible to receive a payment, even if it's raises the holding limit, but for others it will be zero limit.
Yeah.
Excellent, makes very, very clear. So I'd like to bring on our panel of Digital Euro experts now. We have Jerome Goblet on the line, Product Manager Worldline, Simon Chantry, CIO from BIT, and Wolfram Seidemann, Chief Executive Officer for G&D Currency Technology, and Victoria Cummings, Chief Legal and Regulatory Officer from RTGS Global. Welcome to you all. So hi, welcome. Yeah, Jerome, I'd love to just turn to you first. Worldline does a lot in this space, so just give us a little bit of an overview of your work on CBDC and also your thoughts on Ulrich's presentation and the project as a whole.
Sure. So we're engaged with the ECB work since the beginning of the investigation phase 2 years ago. So we have a representative in the market advisory group. We are also represented through ETPIA, the European Digital Payment Industry Association. So where we contribute to the work done by the ERPB. Myself, I'm part of this group as Digital Euro expert. And of course, we also participate to all consultations, every exchange to which DCB invites us. We try to be as active as possible on this matter. Yes, so I have a question for you, Mr. Bindseil. So first of all, thank you for the very clear presentation, and congratulations for entering the next preparation phase. It's a question, so we touch point a bit on this in the question raised by KTN. It's about the market share and the success of the digital euro and the impact on private payment solutions. And here I will quote yourself in the paper that you wrote, published in December 21, and the famous statement that it should be successful but not too successful. So on the one hand, of course, the digital euro must be used and adopted enough to meet its objective. But of course, on the other hand, it should also leave space to other private payment solutions to coexist and let the market to continue to be dynamic and foster competition. So in comparison, for example, we all witnessed the great success of PIX in Brazil, and the impressive transaction volumes that were reached 3 years after launch, which recently went even over the debit and credit card volumes. So my question comes in two sub-questions, actually. So the first one would be, how do you intend to strike the right balance to reach a balanced network effect that allows the coexistence of the public and private payment methods? And the second sub-question, so is it something that you intend to monitor and when the digital euro is launched? And if some adaptations are required, how do you intend what mechanism can you use to recalibrate the network effect? Thank you.
Good question.
Yeah, thank you, Jean. Definitely an excellent question, because the general principle of why you need CBDC, at least from our perspective, is clear, but it's not trivial. I mean, the whole thing is not so trivial in practice because of this much closer substitutability, with private payment solutions, while banknotes versus private payment instruments, was a relationship which is moving gradually in favor of private solutions, because banknotes is just a technology, a stable old technology. But here we enter then exactly the same market, and this becomes more tricky. And I think it's difficult to give now a universal answer. The phasing in will take some time. No, I mean, you refer to PIX in Brazil, which took off really quickly. Let's see, if how quickly it goes with digital euro. We would also not be disappointed if it goes a bit slower than PIX. It can take time. And then I would say we are then in a dynamic environment. We will discover a lot of things in practice, and we will have parameters, that will pop up that we can adjust in one way or the other, where we can then also balance it from this perspective. But I think that's really a matter of experience. Time will tell. But we will discover a lot of things, though, which we cannot anticipate, and we will have some screws, which we can play with that we maybe cannot even fully imagine now. But there are some examples, if I may give one, of firms which are close substitutes in the electronic payment industry. Take the global card schemes. No, you could say they're pretty close substitutes, but they coexist without the network effect somehow, one crowding out the other, because they found a kind of interoperable coexistence. So you have those cases of a rather stable coexistence of similar products in the network industry, also in payments. So excellent question. I think we have the tools in principle, but we will discover a lot of things, and I look forward how this will play out. But I'm not, worried that we can. I think the digital euro as a starting point has some strong, call it even privileges, from the perspective of being central bank money and benefiting from legislation in the way I mentioned. So at least the risk to fail completely is not so big from that perspective. And the risk of being too successful, let's not dream. Let's first make it a success before worrying about this scenario.
Thank you.
I think we'll learn by doing, Jerome. Simon, I'd love to turn to you next. You've got a lot of experience with CBDC projects hand-on. Please.
Thanks, Katie Ann. Great to see you again. And thank you, Ulrich, for your presentation on the digital euro. I was super interested back in 2020 reading the tiered CBDC and the financial system paper that the ECB put out. I thought that was super interesting for mitigating the bank funding risk and putting in just sophisticated functionality for different scenarios that could play out as far as demand for CBDC goes across different stakeholder groups. We've dealt with some of these challenges on a country by country basis and played around with different designs for mitigating that bank funding risk. But I'm definitely interested, given the complexity and the amount of countries within the Euro system, if you've done further work on the interest rate, the tiered interest rates. You've spoken about APIs and perhaps the differentiation available for different stakeholder groups and the sort of APIs that you would release. So I'm quite interested in any further considerations that the ECB has had regarding whether it's circuit breaker style technologies or functionality that would mitigate that bank funding risk, or just generally how you're considering some of the positions that were written about back in I think it was January of 2020 that tiered CBDC paper was released.
Yeah,
thank you.
Thanks, Simon. Yeah. So this tiered CBDC paper was, not an official ECB paper. I wrote it and even rather quickly, and there my vision, my preferred vision was indeed remuneration, as a tool to control against too high amounts. And I had there some arguments which I still like myself, which, were supporting this feasibility of only having a remuneration-based system. But, maybe for economists, remuneration sounds good. But for many other people, it sounds, horrible. Both for banks, it didn't sound attractive because they hear positive remuneration and they then fear even more the competition. And a lot of others, see negative remuneration and things like financial repression. And so I would say all those who are not economists, and so it's 98% of people didn't like it, and therefore we ended with limits. So ECB has now said it will be limits, and the legislation also talks about limits, the draft legislation. So there will be limits, but still you have the question how to calibrate them. And here the 3,000, I had also written it into that paper. And since then, it's difficult to come up with a better number. The calibration will come closer to the issuance, and whether this initial number, which has been repeated at the end, is out of very good reasons to put a different number, will be the number or different one we will see. Bank of England came with a much higher tentative range, 10 to 20,000 pounds, and one point you rightly raise is, across the euro area, there's a lot of heterogeneity. So the average bank deposits of people in Estonia are not the same as the people in Luxembourg, let's say. And therefore you could say 3,000 withdrawal per person from bank accounts is something different there. That's true. main argument to say this is true. We have to analyze further. We have to be sure true, but at the end, at individual bank level, there's competition, first of all, between banks, no? So there's a lot of innovation in this market. There's big tech entering the market, like the Apple savings account, to take one now, which were highly remunerated. So a big tech can leverage on one bank or one banking license. And, there are lots of, the individual bank balance sheet is not protected anyway, no? Digital euro with a control of 3,000 euro max quantity is over, let's say, a 10-year horizon, just, something less relevant than all the competition that you can have in this evolving market. And with big tech and anyway, online banking, integrated online banking. So from that perspective, I would say the individual banks' specific issues are anyway not, the digital euro is not the changing factor, no? And therefore the necessity of disaggregated analysis bank by bank is, it's good to do it, but it's not, only for digital euro that you should do it. It's a matter of banking supervision and liquidity resilience of individual banks with digital euro, and digital euro should not be in the main focus of that. But of course, we will do this analysis also for digital euro, and let's see, what the calibration. So there's a team of people from financial stability and monetary policy who will work on this for the coming years. So a lot of more analysis will be done.
I think you're saying, then the risk to banks is exaggerated quite a lot.
I want to take it seriously, but I think one should not push to the extreme the necessity of individual bank analysis, because every bank is competing with 2,000 other banks in the euro area.
Yeah, no, exactly. Simon, anything to add or respond?
No, I appreciate the response. I think it's quite a challenge, given, again, like you said, the heterogeneity and just really thinking for that diverse of an area. Like, I'm very curious to see how that's addressed. But you're right, especially in the climate of bonds being priced much higher, and it affects these liquidity calculations and sort of the tolerable ranges for banks. So I'm definitely interested to stay tuned to that, and thank you for the thoughtful response.
And we'll keep reading your own papers, Ulrich, the ones that aren't the official ECB ones, with keen interest. Wolfram, over to you.
Yeah, well, thank you very much for joining that panel. And Ulrich Bindseil, I want to congratulate you and your team and the entire Euro system, because with the work that has been achieved in 2 years, you have actually taken over a few other projects where experiments were being made, and it's rather impressive to see. Although we still have a lot of different assumptions floating around what the digital euro could be and what it looked like, and there are a lot of misassumptions also still in the public domain, as well as also in the financial system. I hear still very often, why should citizens have an account with the ECB, as one of the arguments that has been used, and how can citizens differentiate whether this is now value on their commercial bank account or whether it's value on the commercial bank hosted ECB account. So I think a lot of work still is in front of us, and what are your next steps forward here to have a convergence understanding of the digital euro in the digital euro ecosystem, because we have a lot of stakeholders involved. And what is your expectation there towards the market, also towards player like us? We are involved in many discussions with other central banks around the globe on how CBDC design can look like, and do a lot of exchange here. And it's really a pleasure to be with a fine team of experts, one of the thought leaders in that historic chance to shape the new format of currency. And what do you expect from us? How can we help you to make the digital euro to be successful?
Yeah, thanks, Wolfram. Very good questions, complementing the previous questions, different perspective. So, I mean, first you mentioned the continued, maybe fundamental question marks that some people are raising. So why at all is a need, to have central bank money? And okay, I summarized again this at the beginning, but a good question is how to progress, in the buy-in of society, of everybody to understand those arguments, because some of them are a bit abstract. And I give you one example. The Austrian banking sector just, invited for an expert opinion on digital euro. They tasked Mr. Bofinger to deliver one, and Mr. Bofinger is a well-known critique of CBDC for a few years. So there's still, some resentment against the need in general of digital euro that continues, and we have to repeat and refine and improve our explanations, both to experts and to the large public. That's clear. It's not trivial. We have to maybe be even better in it than we have been so far. Then you have, of course, the industry, and in terms of the distribution, there the scheme rule book is really now the decisive work for the next project phase. It's a very important work. We need there the expertise of the industry. At the same time, we made clear that the governing council is the owner at the end of the rule book, because the rule book must achieve the policy objectives of the digital euro, but it must be intelligently designed to make this thing work efficiently. That's why we have to listen to the industry and to the expertise. I mean, then on technology providers like you are one now, and as you said, you are successful in a number of countries. I mean, there we will procure basically, so that's also something that is to progress with. As mentioned, we in the last 2 years mainly focused on functionality. Now we are moving also to technology and to procurement, and this follows, I would say, the standard rules, where then we have a very formalized procedure where we procure basically. If that answers your question.
Yeah, thank you very much. Can I have a follow-on
Sure,
point? Because when you came out with your design, there was one aspect which really surprised me. Since I think we also had a lot of exchange with your team, and the way how we look at CBDC is to be a platform for innovation, a digital public infrastructure that is offered for market participants to develop new products and services. And still, with the rule book, you are moving away from the pure platform player to offering a vertical as well, to partly compete with existing and to get one step closer to the end user, I would say, as we see that in some other well-designed CBDC concepts. Again, what's driving you there? Do you think you need that in order to finally standardize or bring the commercial players together to accept a standard, and in order to gain traction on the digital euro adoption?
Probably the devil is in the detail, and I mean, happy to hear exactly. Maybe it's too much for this discussion, but we don't want to over-engineer this rule book. We want to have there what is necessary to achieve the policy objectives, but not more than this. No. So if there are some points where we can be convinced that it's overdone, that it does not be part of the rule book, and that just openness and not regulating something is fine, I think then you're happy to listen, and to be convinced. So maybe I'm not deeply enough now in the questions that you have in mind, but I would say the rule book should cover what is necessary to reach our policy objectives, and including ensuring this open and innovative, ecosystem where people can enter subject to, complying with what is necessary from our perspective. But happy, to continue this dialogue to understand from you what is overdone maybe.
Okay, thank you.
And we had a similar questions coming through from the chat on that, Ulrich, people asking about to what extent will the scheme cover existing rules and regulation, and what will be new, but it sounds like that's coming in the next phase. So we don't have to dwell on that anymore unless there's anything to add.
There's one thing, the scheme, the other thing is regulation, no? So of course we have a whole set of regulations being applicable to retail payments, and there's also the question of what is for digital euro. Automatically, what does automatically apply? What is taken up in the digital euro regulation to either make clear that it applies or to modify it or to waive it for digital euro. So the whole regulatory topic is also one, of course, and we will see, again, the details will show what questions arise there. And on the scheme, I would say the scheme is a standalone scheme. Of course, it can, for the sake of synergies, be similar, be inspired, by what exists in the industry. So, for example, if we have a QR code standard, let's not reinvent the wheel, but let's seek, one which the industry is anyway foreseeing. So in this sense, we should recycle, we should maximize somewhat the synergies.
Yeah, no, that's very clear. And that was from a colleague, another central bank colleague, asking for those differences. So thank you for your question. Victoria, I'd love to turn to you now, and perhaps we can touch a little bit on cross-border payments, Ulrich. Victoria, over to you.
Yeah, so Victoria Cummings, I look after the legal and regulatory function at RTGS Global. We're a company that's innovating in interbank cross-border FX settlements and payments, answering the call to action from the G20 roadmap, in particular, building blocks 9 and 17, very focused on enabling additional capabilities, for example, for firms to payment versus payment settle their FX transaction to take principal risk out of the industry. So, we're very much focused on cross-border and interbank. I'm particularly interested, I would say, in the digital euro's evolution in terms of cross-border capabilities. Partly because the space that we're in, which is cross-border, interbank cross-border, obviously forms the backbone for much of what happens on the retail side and the consumer side in terms of cross-border, cross-currency payments. Also, I could anticipate us seeking to have the capabilities to provide the technology for what in the future, hopefully, will enable cross-currency exchanges of digital euro with other digital currencies. And I suppose also on a personal note, I love to travel and I love to shop. So I'm very interested in a future where, I could have multiple wallets or one wallet with various different digital currencies in it that I could use all around the world. So my question, on that basis is how much collaboration and thinking in terms of the design of a digital euro, a digital currency, needs to be global in nature. And for those of us that might be looking, that potentially would be looking to in the future build or provide capabilities for cross-currency, cross-border exchanges of digital euro with other currencies, are there any particular elements of the design or of the thinking around the policy that need to be common across different jurisdictions that we should bear in mind in working to provide that functionality? Or, or really is it just that the focus is on domestic for the time being, and we'll cross the cross-border bridge when we come to it? You know, conscious that cross-border, cross-currency is a future phase. Let's do one thing at a time. But just in terms of anticipating and designing for that future, you know, what are the common foundational elements that are required across digital currencies versus what can be more unique in terms of the design and the thinking around policy?
Yeah, thank you, Victoria. I mean, first of all, your initiative is certainly welcome one. As you said, you respond to a call of the G20, so there's a lot to improve in cross-border payments. And I mean, I would not see the immediate you know, relationship between finding solutions for cross-border use of central bank digital currency and what you are doing is, you know, serving banks in their settlement, basically in you know, at the layer of bank holdings in central bank money across the globe. I mean, that's what I understand you are looking for. So as CBDC would be also directly central bank money, we would see, you know, at the settlement layer, direct connection then between central banks, although we would have an FX conversion. I think connecting CBDCs wouldn't mean that the central banks would take over the FX conversion. So ideally, you would have in the middle a competitive FX conversion layer, which, I mean, of the private sector would do that. And I think everybody agrees that central bank digital currencies should look already at interoperability globally, so as to have, you know, like digital euro is a retail one, that the consumer, when traveling or when shopping cross-border, doing e-commerce, can use it ideally. So there's an agreement that this should be the objective. And there's some early thinking. For example, currently there's a work stream on global standards, you know, an early thinking, what are standards that are relevant and applicable? You know, first step is to identify those standards. There are standards of all kinds, but, you know, this is the basic work, you know, to progress on where we may, you know, take similar choices at the beginning, so to have less, you know, work in the interconnectivity, less translation needed, and so on. But I think the true answer is everybody agrees with the principle and the ultimate goal, but it's nobody's very advanced on this. And the talks also amongst the central banks are taking place, but are not terribly advanced. So also because, you know, everybody has enough domestic design questions first, and you know, all the stakeholders at the domestic level, to maybe, it's at least very challenging to at the same time, you know, coordinate and already agree. But again, there's this work on standardization, which is very good to first identify all the relevant standards we should look at as a starting point.
Thank you.
Thanks, Victoria. I mean, that links to a few other questions that have been coming through. Someone's asking another central banker, what was the thought process to proceed with retail versus wholesale? And something on my mind is also, when you do reach to potential launch, is this purely retail? Will there be a point in time where you have to, I suppose, pick between the Italy or the France or the Germany's model of the wholesale CBDC? How does that all interlink with each other?
Yeah, we approach the two things really separately. Yeah. So I mean, the conversation that takes place now for years is one says, what about wholesale CBDC? We always say then wholesale CBDC already exists. It's called Target 2. And then okay, it's on technology. So it's a different already. The whole terminology is a bit confusing, I would say. But if we talk about DLT in wholesale payments, then we are working on this now. And you refer to the French, Italian, and German approaches now in the experimentation we will do next year. So this is really experimentation and trials. So it's a step further, and the two models, I mean, the German and the Italian model are slightly similar in the sense that the central bank leg, the central bank money leg, remains on a central ledger, and there's an interconnection to a DLT on which some digital assets are, while the Banque de France approach is a DLT on both sides. Yeah, I mean, and still it's a separate DLT. It's not a regulated liability network where you dump everything on central bank money and all sorts of other assets onto one blockchain. So we are working on this as well, but we feel we are less advanced in it, frankly, because the necessity and the exact way to design it then are still discussed in a very wide sense. While in retail we think it's relatively clear why we should work on it and what use case we cover, what difference make.
Yeah, I'm very conscious of time. You've already been very, very generous. If I could just ask you one more audience question, because we've had a lot coming in, but I think this is an interesting one, and then we will leave you be, Ulrich. The question is, can you clarify the distinction between conditional payments and programmable money, which I think is an important one to cover?
Yeah. I mean, this programmable money, we have been, or some, let's say, civil groups, or have expressed the fear that CBDC is a way to control citizens, to tell them not to buy meat any longer or whatever. And we wanted to make very clear that's not the case. It is not about additional controls, and one unit of money will always be a unit of money there, not programmed in the sense of having specific properties depending on how one unit is programmed. But what we want, of course, is what has been accepted for a long time to really make sense is to be able to trigger payments through APIs, and therefore whatever is then on the other side of the API can be any machine, can be any logical combination of conditionality. So there everything is possible that has been recognized in open banking now as being valuable, and deployment of open banking is still in slow motion for even commercial bank money, but we definitely want this also for digital euro, because we believe into the merits of it, and there we say clearly yes, that should be. And I would say it's not rocket science, because I mean the main question here is on the API standard. Then ideally an API standard would have emerged in the industry also for commercial bank money, and then again we should not reinvent the wheel, but let's see that.
Yep, and you're certainly right. There were lots of people skeptical of the digital euro and the programmability element. So conditional payments and that distinction, I think, is very useful to ease concern. Any final thoughts, Ulrich? I wanted to just give you the opportunity to give everyone a final takeaway. Any specific one thing that you're excited about in the next phase? Anything that we should keep in mind?
No, just to say that I really like the discussion. The questions raised were the right ones, and that shows, we are on track. We have a common understanding of also of the challenges, and that's why, it will take some more time before we see the digital euro.
Yeah.
And we have this time because, the fully digital. I mean, if you extrapolate trends, yes. In a few years, we have really a predominance of electronic retail payments, and maybe a marginalization of cash, which we don't want, but which may happen. We have a few more years. There are non-trivial questions. We are working on them, and I really like the comments and questions of the panel colleagues and from the audience. Thank you.
Thank you so much, Ulrich, and thank you so much to everyone listening. I think we have a global audience today, and thank you again for the engagement. And as Ulrich said, the feedback loop. We're very pleased to be here to help move the discussion forward, myth bust some misconceptions, and help the public and private dialogue move on. So thank you so much, Ulrich. Thank you, Wolfram. Thank you, Simon. Thank you, Jerome. Thank you, Victoria. And look forward to discussing the progress this makes and future debate in next few weeks.
Bye-bye. Thank you.
Thank you,
Thank you.
Thank you, everyone. Bye.
Goodbye.
Thank you.